What's up, good people? Chris with Better Today Trades back with another weekly market recap for you for this February 16th, 2024. Cue the theme music. All right, so this week, the first ticker we're going to look at is TNX. Now, this is the CBOE 10-year Treasury note. This is one I like to look at just to judge the amount of risk that's in the market. I know this is a direct competition to equities typically when looking to invest in the markets. So I look at this one because it has an inverse correlation with the markets. So as this one is declining, typically you'll see the market going up. But that has not actually been the case this year. This has been looks like it's been putting in higher highs and higher lows all year, but so has the market. So let's go ahead and look at this one. If you look here on this chart, you can see we've been in a crazy uptrend since 2021. um, just cups followed by cups followed by cups. But if you zoom in here, you can see that we have put in double bottom, higher low, whichever one you want to call this here. And we have also broken this down trend line that we've been in since November. Now, if you guys remember back in November, um, the markets were in a correction, but as soon as these yields started cooling off, this 10-year note started to cool off, the markets went on a crazy tear to end the year and to begin the year. We've been just up and it's stuck. But as you can see, the 10X looks like it might be one to break out here, looking for this $45 level or this $47 level as resistance above. But knowing that this time of the year, the end of first quarter is oftentimes tough for the market, I would expect this to go on up into those levels while we watch the market pull back. Another thing I like to look at, another ticker that I like to look at to judge the risk that's being priced into the market is the VIX. Now, the VIX is just a representation of what people in the market expect the S&P to do over the next 30 days. So as the number on the VIX rises, it means that more people are betting on the SPY, the S&P 500, to decrease in price. So as this number goes higher, the price for the SPY tends to go lower. Like I said earlier, we do know that seasonality does play a huge role in the VIX here. I actually did a video on that back in August of last year, if you want to go check that out. But typically quarter one and quarter three do see spikes in the VIX. So with that in mind, I want you to go ahead and take a look at the VIX here. Now, if you zoom in on the VIX, you can see as we've started the year, we have been putting in nothing but higher lows and higher highs. And if you look at this week here, we did have the VIX finally wake up. It ended green. White on my charts is green, so it's an up week for the VIX, which correlates to a down week in the markets. But if you look, you can see nothing but since about I'll say since December, we've been cupping down here, and then it's nothing but uptrend from here on out. And once we broke above about this $15 level, we were able to run up into almost $18.25, about $18 before pulling back this week. So just keep an eye out for the VIX because it does look like it's waking up for its quarter one revival, if you will. So yeah, where I'm looking for more upside in the VIX over the next 5 to 6 weeks just because of seasonality and because of patterns that I typically see in the VIX. But if you want a more in-depth look on that, you can definitely go check out the video we did back in August for this. All right, moving forward, we're moving right on to Apple, if I learn how to spell it. Now, Apple was once the most important stock in the markets, and I still personally believe it is, but Apple does not look like it's having a good time to start the year. Like I said, the market has been on a tear this year from January to now. Microsoft is up, Nvidia is up, AMD is up, Amazon's even trying to play the game as well. But if you look at Apple, we zoom in on Apple and you can see that we have been struggling to stay above 195, 190 area. Every time we get up here to this 195 area, we do see resistance. We've seen it 3 times now. If you look close, you can see sort of a head and shoulders pattern forming on Apple here, with one shoulder being over here in July, the head being here in December, and the second shoulder being here in late January, early February. Now, if you look close, well, by definition, a head and shoulders pattern, you can see that there is lower highs here that have printed. Now, this head and shoulders pattern will not be confirmed unless price can break below at least 180. I'm thinking 180 to 175. Really, if we can break down about 170, then we should expect more downside for Apple. But Apple does not look like a stock that's ready to rip at this moment. And then when you add in the seasonal factor of uh, the end of February and March being weak for stocks, this doesn't bode well for Apple. But contrary to Apple, if we go ahead and look at Microsoft itself has been on a tear. Look here at Microsoft. It's been basically straight up ever since the first week of January. After we had a little bit of wobbliness on the first week of January, but ever since then we've broken out and we've just been up and up. We did have a pretty red week this week, but as of right now, still in a very strong uptrend. Nothing much to worry about, although given the time of the year, the seasonality, I would not be surprised to see this either consolidate here or go lower before going higher in maybe we'll say April, Mayish. So you can look at Apple, you can look at Microsoft. Right now, it looks like things maybe weakening up, but it's a little tough to say here at this moment. And the last ticker that we're going to look at for this week's recap is XLV, the beloved healthcare sector. Now, if you look here, if you remember back in January on our last recap, we did speak about XLV, the healthcare ETF, and we did look at the top 5 holdings that were in the healthcare ETF and kind of do a technical breakdown on each one. But if you remember, I did say that we were trading between this 125 and this 140 level range on XLV, but it did look like XLV was ready to break out to the upside. And since then, we've seen a beautiful breakout of this 140 level here, and we've put in brand new highs for XLV on the year. Now, granted, like I said, this is still a weak period in the market, but so this may be the top for it, it may not be. But if you look at this, this is very strong price action for XLV, the healthcare sector, as well as most of the market as of this year. So that's your recap for this week, you guys. You can go ahead and pull up these charts and look at them and see if you see the same thing I see. Do you see anything different in these charts that I haven't mentioned? Are there any charts that you want me to check out in the future? Put those down in the comments. Remember to like, remember to subscribe, share this with friends.